Hi, my name is Ryan McIntyre. I'm the president of Maverix Metals. Maverix Metals is a company that's focused on gold royalties and streams. We've got 121 royalties and streams currently, 13 of which are paying. So we've got a great portfolio of free cash flowing assets. We did about just over $50 million of revenue last year at 90% margin. And we've got a great exploration and development program in the portfolio.
Good to have you back, Ryan. How have you been keeping? How's New York City?
Everything's well, thanks.
Yeah. I hear there's a storm coming your way, though, just so you know.
Thanks for letting me know.
Okay, well, thanks for coming back on. I think we spoke with Dan back in March, but there've been a few press releases out since we caught up with him. One of which I'm quite excited about because I think your industry needs to do more of this. And you basically published an asset handbook. So explain what that is and what you were trying to do with it.
Yeah, so we just published our second edition of our annual handbook. So we just posted it onto our website last week. And what's great about that is it's a 47-page user guide to Maverix. So it's everything Maverix from our history, talks about the creation of streams and royalties, and it obviously talks about all of the different assets we have that are currently paying, and it also delves into pretty good depth in terms of the ones that we have, advanced projects on. So it's a great comprehensive book, and it's something that as an investor, I think would want to have, and that's why we did it.
Good. Well, like I say, I don't think enough people do it. I haven't seen anyone else's version of this, but why I think it's important is because you are in a very complicated industry. Brokers struggle to actually break down and analyze exactly what it is that you've got. In fact, it's exhausting thinking about it. And I've spoken to lots of fund managers who don't get into royalties because it's just too hard to kind of break down and totally understand. So is this the first step of a new way of presenting information? You're going to do the heavy lifting for brokers and investors? Is there more to come?
Yeah, well, it's certainly part of our job to make sure everyone's well informed about what we're doing and what we currently have. I mean, certainly in the mining industry, if you have a few mines, that's actually a pretty well diversified company. And so I guess the beautiful thing about, the royalty space is that, we have 121 royalties and streams now. And so that's extremely well diversified. But it is tough to keep track of 121 different things. I mean, we do it full time, so it's even a lot for us. But, I can imagine someone who's just looking at it periodically. But certainly something that we're looking to do going forward and improve on as time goes on.
Okay, you've got 13 paying assets. The rest of the 121 are getting there. So what, in terms of the near-term stuff, and by near-term for me, that means that, revenue coming in the next 2 years or so. I mean, how big's that?
Yeah, well, the three big things that we're focused on is, we've got the Camino Rojo project moving into production in Q4 this year. So we've got a 2% royalty on that, and Orla is developing that. And that'll add about 6 to 7% growth to us from just that one alone. And then we also had a recent announcement from Koné Resources, which was really exciting for us. Basically what they're doing there on the Beta Hunt mine is they're basically doubling the throughput of mining there. And we've got a 4.75% royalty on that. So that's a big deal for us. And so that'll add about 10% to our revenue growth in the next several years. And then probably one of the things that's really crept up on us since we acquired it as part of the Kinross transaction at the end of 2019 is our royalty on the Koné Project, which is being developed by Montage Gold. And they've really been moving through resource definition and expansion. They just released a preliminary economic assessment that shows plus 200,000 ounce a year producer for 15 years. And because we've got a 2% royalty on that, that's over 4,000 gold equivalent ounces to us and about 15% growth to our revenue base. And they'll be putting out updated resource Q3. They've got the feasibility coming at the end of this year, and they expect to actually be fully permitted in the first half of 2022. So things are moving along quickly for us, or for them there, and for us hopefully soon.
You're of a certain size, right? 750, 800 million bucks, right? So it's been a sort of interesting time in precious metals markets, and obviously I imagine to some degree you largely track that. But how does a company like you move to the next stage? Like $2 billion, $3 billion. Is there a meaningful growth story to what you do, or is it just slow, steady, accretive growth, and that's what we should expect from you?
Yeah, you should definitely expect growth over time. I mean, that is our objective. And we're really going to do it in two main ways. So we already have a great organic portfolio that's already embedded in the company. I mean, as we just talked about, we've got 121 royalties and streams, and only 13 of them are paying. So we have 108 there sitting in the background every day, adding new value, and that the operators are plowing capital into the assets, moving them forward, making them bigger, and pushing them towards the paying category for us. So we've got that already embedded in the portfolio, which is pretty unique, I would say, especially for our size range. And then there's on the M&A side, where we're always looking at new acquisitions, and that could be, individual assets, that could be portfolios, which we've become known for, or other things on the corporate side, given there are a lot of players out there, or we could become a target for that matter. So we're always looking at anything to keep moving forward and adding value for shareholders.
So if you're looking for M&A, I mean, did you look at the Ely deal that's just been completed?
We've looked at everything. So, that would certainly be something that we have looked at. We look at everything because we have to. I mean, that is definitely our job to assess, what things should we be putting shareholders' capital into. And that, like I said, that could be corporates, that could be individual assets, it could be anything.
Okay, you talked to me the language of like slow, steady growth, but growth nevertheless. But if you look at the market as a whole, because you're looking at everything, is it getting more expensive? Are the types of royalty bundles that are being put forward just don't suit your profile? I mean, why didn't you pick up Ely? Did you want it?
Yes, I mean, one of the things that we look for, is the balance between risk and return. And so, we've got a great in-house technical team, and so risk is the first level of valuation for us, and that comes in many different forms. And firstly, we start off in the technical level. And so, we try to make an assessment of whether an asset is likely, if it's not paying, to proceed to be paying, or if it's paying, it can sustain itself over a life cycle of various commodity prices. And, I think that is, I would say, the baseline where we start. And then everything from that point, it could be, you're talking geography, social, you're talking a bunch of different other aspects that come into that risk category. And then we could also talk about the opportunity side as well. Because it's not just risk, there's also opportunity in terms of how does that flex between different scenarios, whether it's commodity price or otherwise. And then how do we balance that off by how much we should pay for that sort of risk level and that opportunity level.
So is it getting more expensive out there?
Listen, there's definitely more competition for sure. But I have to say there's a lot more stuff out there to look at now than there was a year ago too. So
are you steady as you go in terms of your strategy and the criteria by which you will buy, or are you having to adapt that because the market is heating up a bit?
Yeah, I mean, we always sort of adapt things as we learn more or we have a different, view of things. But largely I would expect similar to things we've done in the past. We're pretty methodical in how we analyze things. We've got a pretty good data set, and we keep pretty good track of, what we've looked at, what's worked for us, what hasn't worked. And we've had a lot of experience in the sector. So we look to put that to good use.
But if I look at the industry, I'm trying to work out, who's perhaps doing it right, perhaps who's, struggling a bit. Analysts look at you and go, hey, their PNAV is 1, 1.5, 2.5. There's a real big range between companies out there. I mean, where are you comfortable sitting at or positioning yourselves? Where do you start to feel uncomfortable in terms of, how you stretch your balance sheet or how you set out your portfolio?
I guess for us, one of the biggest tenements is that, we have such a great strategy. I mean, the royalty business model is unbelievable. And, as we just talked about, I mean, there have been a number of new entrants come into the sector. And that should be no surprise, given the results from some of the larger players, Franco-Nevada, Wheaton Precious Metals, Royal Gold, who have been there for a long time, and they've been very successful. And the great thing about the royalty portfolio is that in our case, we don't like to bet the company on any one individual asset. So not one of our royalties is really going to break the company. And, if you've invested in the space or any space for that matter, you're not going to get everything right. But I think if you've got a great strategy, you're diversified, and you keep to certain risk reward parameters, over time, you should be really well off. And, so from a balance sheet perspective, that goes the same way. You'll never see us become over levered. So right now we've got no debt. We've got about $55 million in cash and securities, and we've got another $120 million on the revolving credit facility that's undrawn. then we also have the cash flow that's coming in here every quarter for us. So pretty strong in that regard.
Are you going to stick with precious metals, or are you slightly tempted by what's going on with the battery metals?
Yeah, so right now we're 99% gold and silver in terms of revenue. And then if you look at the development pipeline, it's that exact same flavor in terms of almost exclusively precious metals. So we definitely do have some capacity. We've seen some other competitors in the space gravitate towards some other commodities. We'll look at that depending on, again, going back to the risk return level and what we're seeing out there. We'll evaluate everything, obviously, and take a look at it. But our focus for the long term is certainly on the gold and silver side.
Right. And obviously, looking at your share registry, you've got some pretty big mining partners. You've got Newmont in there, and that's going to help with the portfolio composition. But so I keep coming back to this. It's getting hot out there. And obviously, you mentioned the Wheatons of this world who set the bar. Right, everyone I'd like to be like them. I'd like their multiples. But is it as easy? No. Is it going to be easy going forward to copy that model? Do you expect to see more M&A, or do you expect to see some companies actually saying, well, perhaps we are going to have to look at other commodities like precious metals. We are going to have to just change our strategy a bit because the competition is just it's hot out there. You're lucky position having a lot of cash. It's great, but you don't want to overpay. So what do you do?
That's the thing. And sometimes the best thing to do is nothing. That is the viable strategy too. I mean, and I think that's one of the advantages that we have as Maverix is that we have such a deep pipeline. And particularly some of the new entrants, they're accumulating that pipeline as we speak. So, we've already got that. And so the reality is we don't really have to do anything if we don't want to. We don't feel that we're stressed to need anything. But on the other hand, again, we'll always look at everything that kind of comes by our desk. I mean, that's our job. And there are a lot of smart people in this space, and, nothing is easy per se. But I think, keep on plugging away. We use our relationships, our networks, and frankly, our sort of risk return kind of criteria. And we think we'll be successful.
But everyone's kind of got those relationships, and all the banks come to you guys. They pick up the phone, please bid, please submit a bid, because that's their job. And I know you're not under any pressure because you've got a bunch of cash and access to cash to be able to do deals when the right deal comes along. And I know you noticed recently you've increased the dividend to another 25%, so it's up to 1.25, which is good. But the share price is it's moving sideways at the moment. Is this should I as an investor be thinking there's a long-term play here? Get used to it. As part of my portfolio, this is a reasonable, slow and steady growth story. Or do you think at some point despite the cash, you're going to come under some pressure from shareholders say, hey, we need to get these things moving here, or I'm out of here. I mean, again, what are the pressures that you're under from that regard?
Yeah, I mean, obviously, one thing to evaluate is, how much capital do you have and how are you going to allocate it? I mean, that is obviously critical. And, as you just mentioned, we did increase the dividend in May by 25%. And, that sort of represents about 15 to 20% of our free cash flow. And there's no fixed formula for that. But I guess our overall philosophy with that is that, we are trying to grow the dividend as Maverix grows. So as our cash flow per share grows, you should expect our dividend per share to grow as well. So, that is just, I guess, fundamental to Maverix. And, we are an investment for the long term. We do have a great business model, a great strategy. And I think the one thing that people often get forced into is to do deals that are too expensive, sort of out of the comfort zone or out of their depth. And I think, we just want to be straight down the fairway as best we can and not bet the company on anything. Because we know sometimes we'll be wrong. We'll be right a lot of the time or some of the time. Hopefully we'll make out on that a lot better, but we'll lose on some for sure. And you just don't want to risk it all. And that comes back to the strategy being over levered as well. So, the combination of high leverage and high prices are usually fatal, as we saw 10 years ago in the previous cycle.
Well, those are the lessons I want to learn. Those are the lessons I want to understand here, because paying a dividend is better than not paying a dividend. Okay, but 1.25, I can probably get that from the bank. So my other way of making money is when your share price goes up. I don't want to see that. But, and you've got 13 paying royalties and they're 10, 15 year, possibly longer life of mine. So you've got revenue there. And it's how quickly you accumulate that revenue and build that revenue profile up that I guess I should be interested in, right? Is that what I should be focused on?
Yeah, that's certainly one component of the business for sure. And, with a 1% dividend yield, I mean, you're certainly getting a lot more than you are on banks or, government securities for sure. And I think the beautiful thing, again, about the royalty model is that we've got all these costless options that never expire. And, if you look at the portfolio that we have is structured, we've got a great balance between immediate cash flow and long-term growth. So it's layered perfectly for somebody to behold across cycles and over the long term, because over time, you'd expect that all of the values of our development portfolio to go up as operators are plowing money into exploring more and to developing those assets. So I think that's one of the beautiful things. And it's really a counter-cyclical portfolio as well, if you think about it. If prices are high, we'll be generating a lot more revenue and you should expect more dividends. And then, but clearly in higher prices, it does make access to capital for operators easier. So a little less likely that we'll do a lot of deals. And conversely, in downturns, when commodity prices are lower, maybe the revenue drops. But on the other hand, there's a lot more things to do from, the development side where we're buying new things to fold into the portfolio at lower prices. And so it's this great counter-cyclical nature of the portfolio that's really, I think, the cornerstone for any royalty model, in particular at Maverix, given we've got a great balance between both current cash flow and organic growth.
And when you look out there, I just wonder if there's a degree of frustration when you see there's a lot of arm waving, there's a lot of shouting from, we won't call them peers, other royalty and streaming companies. Do you look at them and can you see people getting it right? Can you see people getting it wrong? Do you begrudge them coming into the space and saying the same things as you? Do you think that people should be looking at you, not them? I mean, what do you wake up every morning worried about, Ryan?
Well, I worry about shareholders of Maverix is the first thing I worry about. And, the only thing that we can control is what we do. We definitely, we obviously are cognizant of what other people are doing. And frankly, we want everyone to succeed. And I think, one of the contrary things, if people ask us if you think this or that is good, and the reality is we actually want everyone to do great deals in the sector, because that just makes our job even easier in the long run of, talking to investors about royalties and streams. We never want someone to become, overstreamed as an operator, because that would create a negative connotation for a stream. And so, what we want is for everyone in the industry to be successful.
Will they be?
We'll see.
Okay. Interesting. Because I keep coming back to this handbook viewers, because it's kind of like, I'm not saying you should stand up and Jerry Maguire moment of let's have a charter for our industry, but it kind of feels like there needs to be, some accountability for some of the claims that are made out there, because I think some take advantage of the fact that no one's going to do the homework on whatever 50 assets or 100 assets.
Yeah, I mean, everyone's got their own strategy and how they do things. But, it is, I guess our view of things at the end of the day, what you can control is adding per share value. So if a company, whether it's us or somebody else, as long as they're doing things that actually add per share value, they might start off at a weaker place, but could move to a stronger place if they keep adding value. That should be everyone's goal. And, there are a lot of smart people in this royalty space. And so, I'd bet that would be their goal, and they'll probably succeed at it. Okay.
And are you going to keep adding to that handbook in the sense that, can we start seeing sort of more, can you do more of the heavy lifting for us to help us understand what good looks like?
We think so. We definitely think there's room for improvement of what we've already have. So actually, I was looking through both handbooks recently just to get a sense of, what's changed sort of year over year on a, page by page type of basis. And, the handbook's grown from, I think it was 43 pages last year to 47 pages this year. And more information doesn't necessarily mean better information. But I do think we are doing a better job at laying out, Maverix's history, what we currently own. And actually this year we plan to make a few kind of sub updates during the year into the handbook, just that should make it more accessible for shareholders. We're going to add a page or two just to allow some quick calculations for investors so they don't have to manually do a bunch of things within the book. And then also add our ESG program, which we'll be formalizing and rolling out, I would say, more publicly later on this year.
Oh, fantastic. Okay. Well, I'd love to hear about that. So just come back to the analysis side of things, though, is do you take the data verbatim from the company and publish it in the handbook, or are you taking your kind of discounted view of what the company's saying and putting it in your handbook? What numbers are you using?
No, we are largely use what the companies say. And, the only thing that we'll be adding probably, or certainly, is we'll be adding some calculations because some of the royalties we only own portions of, depending on the ground position. And what we're going to try to do is put that in front of people in a way that calibrates all of that so they can just look at, our attributable in terms of resource ounces, things like that. So it should make it really easy for investors to take a look and say, Maverix has attributable X reserves, attributable X resources, stuff like that, just to make it really easy for people. Because we do have 121 assets now. And so I think anything to make things more transparent and easy for investors, that can only be good for everyone.
Yeah, amen. Also, we haven't talked about, you've acquired the royalty portfolio from Pan American Silver. Tell us a little bit about that.
Yeah, so we just announced at the end of June that we acquired 6 royalties from Pan American Silver. So this is the second royalty portfolio we've acquired from Pan American. And we basically, for $7 million cash and $2.75 million worth of Maverix shares, we got these 6 royalties. And really, it's largely an exploration portfolio. There's really sort of 4 main assets there. So one of them is a 1 to 2.5% royalty on the Fed Gib project in the Timmins camp in Ontario. They've got a multi-million ounce resource already. The operator's doing a 50,000 meter drill program already on it. So that's moving forward. It's got a great land package. Next one is actually an operation that's just ramping up now in Peru called Recuperada. And so we've got a 3% royalty on that large land package. It's 15,000 hectares, previously operating mine. And this company called SilverX basically is just moving it from basically sort of trial mining right now, and we'll be ramping it up in terms of throughput over the next few years here. So that'll actually hopefully be paying soon to us. And then one other one that's pretty notable is the royalty we've acquired on the Juby asset. It's a 1% royalty, again, multi-million ounce project in Ontario, great land package, near infrastructure. So all the things you like to see for future development. And then probably the one hidden gem in the portfolio is this royalty, 2.5% royalty acquired on Hernandez property, which is a property actually that surrounds Silvercrest's Las Chispas project, which they're currently developing. So it looks like it has some good potential, no resources, but great land package. So we always like to get those in there. So we've got great optionality there.
Let me ask you about jurisdiction risk and how you guys view it, because I get the slightly longer term horizon, but you must believe at the end of it, it's going to get into production, right? So we've seen news like coming out of Mexico this week with regards to Pemex being given control of a joint venture with a US company there. So the Mexican government stepped in and upset the Americans somewhat, making a unilateral decision there. We're seeing some of the sort of commentary around with regards to elections in Peru, in Chile. We've seen it previously in Ecuador and Mexico to a degree. It's the same thing with South American assets all the time. When there's an election, it's a socialist country. It's no good for mining. We're all in trouble. How do you view jurisdictional risk? Obviously, North America seen as a little bit more friendly, broadly. But you're sitting there with some South American assets. Is that just you have to pick them up because they're part of our portfolio, or you think actually that we're fine, we're very comfortable with South America?
Yeah, I guess just to start off with, just in terms of how we look at the geographic risk, political risk, there's sort of a couple different levels, but certainly the one key thing we look at is rule of law over the long term. So there will always be some elections that are more favorable to mining, some that are less favorable to mining. But, typically there's been a history within a country of the rule of law, and there's sort of status there. And things will ebb and flow. And I guess from our standpoint, right now we've got basically about 3/4 of our revenue coming from North America and Australia. So that's a great spot to start. And again, if you are going into a riskier jurisdiction, there's a couple things to consider. One is the allocation to that. So again, we're never going to put a large portion of Maverix into what people would deem as a risky jurisdiction. But if we do go somewhere that's probably a little riskier, you need to have some combination of a great operator to trust the fact that they're going to do the right thing with the local communities, federal government, and with the project itself. And the project or mine has to be pretty good. And so those are some of the things we look at if we tended to go for some of those jurisdictions that are a little riskier. And to me, it's all a balance of risk return as well. So then it gets back to, how much capital are we risking here and what's the potential return going to be? Because that all factors into the matrix of that balance, again, of that risk return level that Maverix is seeking.
Brilliant. Look, Ryan, appreciate the update. Just want to catch up with you guys. Like I say, I think the asset handbook, it feels like it's a small thing, but for me, I think it's a real big deal. And I'm glad you guys have done it and sort of leading the way on that one. More people need to ask that of their royalty investments. Stay in touch. Let us know how you get on. What are the big things we're looking for this year? Is it just more of the same?
Yeah, I would say more of the same. So you expect continued good cash flow from our royalties that are paying. And hopefully we'll be able to do a few transactions that continue to add value for Maverix, and hopefully some more positive developments on the organic growth side as well. So a lot of good things coming from Maverix.
Appreciate your time. Thanks very much.
Thank you.